All right. Do you all see my screen?
Yes.
I need some. Okay. All right. So this is the Candlestick Trading Bible. All right. This is said to be the most successful trader in history. So we're going to start with the introduction since you all wanted to start with the introduction. All right. So the Candlestick Trading Bible is one of the most powerful trading systems in history. It was invented by Homa Munhisa, the father of candlestick chart patterns. This trader is considered to be the most successful trader in history. He was known as the god of markets in his days. His discovery made him more than 10 billion in today's dollars. I have spent 10 years compiling, testing, organizing, and consistently updating this method to create my own new version, which is considered to be the easiest and most profitable trading system. The Candlestick Trading Bible is the trading method that is going to finally take your trading to where it should be: consistent, profitable, easy, and requiring very little time and effort. This trading system is based on Japanese candlestick patterns in combination with technical analysis. All right. Wait, hold on for a second. All right. All what you have to do is to spend as much time as you can to master the method that I'm going to share with you and use it to trade any financial market. Learning Japanese candlestick is like learning a new language. Imagine you got a book to which is written in a foreign language. You look at the pages, but you get nothing from what is written. The same thing when it comes to financial markets. If you don't know how to read Japanese candlesticks, you will never be able to trade the market. Japanese candlesticks are the language of financial markets. If you get the skill of reading charts, you will understand what the market is telling you, and you will be able to make the right decision in the right time. Once you master reading the candlesticks, then you basically can go to any financial market like futures, Forex, crypto. All right. This easy to follow strategies detailed in this work will provide you with profit making techniques that can be quickly learned. More importantly, learning the principles of market psychology. Ania, can you also mute
I'm gonna check them
everybody?
out. Bring them out later on for another walk, all right?
Okay, I'm gonna have to mute people.
How she gonna pull me if a cat comes?
Yeah, she will.
You know what? Um, can y'all? I'm gonna mute everybody. All righty, let's go back. All right. More importantly, learning the principles of market psychology underlying the candlestick methodology will change your overall trading psyche forever. The Candlestick Trading Bible has already proven itself. Fortunes have been made using the Japanese candlestick strategies. I congratulate you on taking the first step in your trading education. You are on the right path to become a better trader. However, this is actually just the beginning of your trading career. After finishing this ebook, the real work begins. Don't read this ebook very fast. This is not a novel. You should take your time to understand all the concepts I discussed, take your notes, and go back from time to time to review the strategies I shared with you. Remember, this is an educational work that will teach you professional methods on how to make money trading financial markets. If you got the skills that I shared with you here, you will change completely your life and the life of people around you. All right, so this is the overview. This ebook is divided into the following sections: candlesticks anatomy. Just as humans, candlesticks have different body sizes. And when it comes to trading, it's important to check out the bodies of candlesticks and understand the psychology behind it. That's what you will learn in this section. Number 2, candlestick patterns. Candlestick patterns are an inaugural part of technical analysis. Candlestick patterns emerge because human actions and reactions are patterned and constantly repeated. In this section, you will learn how to recognize the most important candlestick patterns, the psychology behind its formation, and what do they indicate when they form in the market. The market structure. In this section, you will learn how to identify trending markets, ranging markets, and choppy markets. You will learn how these markets move and how to trade them professionally. You will also learn how to draw support and resistance and trend lines. Time frames and top-down analysis. This is, to be honest with you, this is one of my favorite parts. Multiple time frame analysis is very important for you as price action trader. In this section, you will learn how to analyze the market using the top-down analysis approach. Number 5, trading strategies and tactics. In this section, you will learn how to trade the market using 4 price action trading strategies. The pin bar strategy, right? The engulfing bar strategy, the inside bar strategy, the inside bar false breakout strategy. Trade examples. I highly recommend you to master the previous sections before jumping to this section, because if you don't master the basics, you will not be able to use these strategies as effective as it would be. In this section, you will learn how to identify high probability setups in the market and how to use these candlestick patterns in trending markets and ranging markets to maximize your profits. 6, money management. In this section, you will learn how to create a money management and risk control plan that will allow you to protect your trading capital and become consistently profitable. The history of candlesticks. Candlesticks have been around a lot longer than anything similar in the Western world. The Japanese were looking at charts as far back as the 17th century, whereas the earliest known charts in the US appeared in the late 19th century. Rice trading had been established in Japan in 1654 with gold, silver, and rapeseed oil following soon after. Rice markets dominated Japan at this time, and the commodity became, it seems, more important than hard currency. Munhisa Huma, Munhisa Huma, a Japanese rice trader born in the early 1700s, is widely credited as being one of the early exponents of tracking price action. He understood basic supply and demand dynamics, but also identified the fact that emotion played a part in setting a price. He wanted to track the emotion of the market players, and this work became the basis of candlestick analysis. He was extremely well respected to the point of being promoted to samurai status. The Japanese did an extremely good job of keeping candlesticks quiet from the Western world right up until the 1980s, when suddenly there was a large cross-pollination of banks and financial institutions around the world. This is when Westerners suddenly got wind of these mystical charts. Obviously, this was also about the time that charting in general suddenly became a lot easier due to the widespread use of the PC. In the late 1980s, several Western analysts became interested in candlesticks. In the UK, Michael Feeney, who was the head of TA in London for Sumitomo, began using candlesticks in his daily work and started introducing the ideas to London professionals. In December 1989, edition of Futures magazine, Steve Nissan, who was a technical analyst at Merrill Lynch in New York, produced a paper that showed a series of candlestick reversal patterns and explained the predictive powers. He went on to write a book on the subject, and a fine book it is too. Thank you, Messer Feeney and Nissan. Since then, candlesticks have gained in popularity by the year, and these days they seem to be the standard template that most analysts work from. Why candlesticks are important to your trading analysis? Candlesticks are important to your trading analysis because it is considered as a visual represent. Okay, I thought I muted everybody. Okay, I'm gonna have to mute everybody. Candlesticks are important to your trading analysis because it is considered as a visual representation of what is going on in the market. By looking at a candlestick, we can get valuable information about the open, high, low, and the close of a price, which will give us an idea what the price movement. Candlesticks are flexible. They can be used alone or in combination with technical analysis tools such as the moving averages and momentum oscillators. They can be used also with methods such as Dow theory or the Elliott wave theory. I personally use candlesticks with support and resistance, trend lines, and other technical tools that you will discover in the next chapters. The human behavior in relation to money is always dominated by fear, greed, and hope. Candlestick analysis will help us understand these changing psychological factors by showing us how buyers and sellers interact with each other. Candlesticks provide more valuable information than bar charts. Using them is a win-win situation because you can get all the trading signals that bar chart generate with the added clarity and additional signals generated by candlesticks. Candlesticks are used by most professional traders, banks, and hedge funds. These guys trade millions of dollars every day. They can move the market whenever they want. They can take your money easily if you don't understand the game. Even if you can trade $100,000 trading account, you can't move the market. You can't control what is going in the market. Using candlestick patterns will help you understand what the big boys are doing and will show you when to enter, when to exit, and when to stay away from the market. All right, here we go. We got about 9 more minutes because we're going to keep it short because I don't want to add too much on you the first day either. What is a candlestick? Japanese candlesticks are formed using the open, high, low, and close of the chosen time frame. So right here we see the upper shadow, right? We see the real body, we see the high, we see the close, we see the open, all right? So this white body would usually be what a green candle is, all right? Even though you see the white body, the green candle opens from the bottom of the candle and it closes to the top if it's going to remain a green candle, okay? So then we have the black candle, which is in a regular stock market chart. It's a red candle. So what it does is it opens from the top, if you see it, and it closes. If it's a red candle, it closes down at the bottom. So what this move is saying, when we look at both of these candles, what this is saying is it's saying that it opened up. I'm talking about the first candle. It opened up at the bottom, right? And at one point, it rose up, right? And that's the highest point that it went. It rose up the highest point, right? It could have also went low also. So it can open up there, go low, and then the highest point, and then go back down and close. So that's what the green candle does. When we want to know what is the high, what is the lowest, what is the opening, what is the close of the candle. So the candle closed right there where it's pointing on the arrow on the first image that we have here. But you know what? I'm explaining all this in my terms, but I forgot that this Candlestick Bible book does explain it. So let me go ahead and read it. If the close is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as white candlestick, right? And that I'm not going to say always because I don't put my candlesticks as white. I have it where I want to see green and red. But some people, they do trade with just black and white candles. The most trading platform, the most trading platform use, oh, okay. The most trading platform use white color to refer to bullish candlesticks, but the color doesn't matter. You can use whatever color you want. The most important is the open price and the close price. If the close is below the open, we can say that the candlestick is bearish, which indicates that the market is falling in this session. Bearish candles are always displayed as black candlesticks, or, like I said, red. But this is not a rule. All right. You can find different colors used to differentiate between bullish and bearish candles. The filled part of the candlestick is called the real body, right? The thin line poking above and below the body are called shadows. The top of the upper shadow is the high. The bottom of the lower shadow is the low. Right? The candlestick body sizes. Candlesticks have different body sizes. So right here we see a long candle, which is AKA a bullish candle, AKA a green candle. So look at the different bodies that we have. We have this little body right there on the left-hand side, right? And then we have a bigger body. Then we have the short. When you see short, short is a bearish candle, AKA a red candle. Long bodies refer to strong buying or selling power. If there is a candlestick in which the close is above the open with a long body, this indicates that buyers are stronger and they are taking control of the market during this period of time. Conversely, if there is a bearish candlestick in which the open is above the close with a long body, this means that the selling pressure controls the market during the chosen time frame. Short and small bodies indicate a little buying or selling activity. Candlestick shadows, aka tails. The upper, I call it a wick. That's what I call it. I call it a wick. The upper and lower shadows give us important information about the trading session. Upper shadows signifies the session high. Lower shadows signify the session low. Candlesticks with long shadows show that trading action occurred well past the open and close. Japanese candlesticks with short shadows indicate that most of the trading action was confined near the open and close. If a candlestick has a longer upper shadow and short lower shadow, that means that buyers flex their muscles and bid price higher. But for one reason or another, sellers came in and drove the price back down to end the session back near its open price. If a Japanese candlestick has a long lower shadow and a short upper shadow, this means that the sellers flash their washboard abs and force price lower. but for one reason or another, buyers came in and drove prices back up to end the session back near its open price. All right, we're going to stop right here because this is going into candlestick patterns. So I'm going to take a screenshot of this so that we can remember where we left off at. All right. Are there any questions? Now I'm opening up the floor. All right. We got 2 minutes. I didn't want to keep this too long, but we are going to go over the patterns next week. Do we have any questions? Okay. So I'm going to just leave you with that. Next week, we'll just do a review of, oh, thank you. We'll just do a review of what it means if the open is on top and if the close is at the bottom and stuff like that, because I want y'all to get that part of it. We are going to go over to the charts, because I want y'all to see with the candles, while we reading the Candlestick Bible book, we're also going to go to the chart so that we can look for what it's talking about. So we'll be back next week, Thursday. It's going to be every Thursday, 8 p.m. Eastern. And the replay will be available. Let me check the chat. Do you have more video suggestions I could learn more from? Yeah, this is, we're going back to the basics. Where can you find the ebook? Okay. You can go ahead and the ebook is called the Candlestick Bible book. But the reason why I'm doing this series is because as much as I've given everybody, the Candlestick Bible book, guess what? They don't make time. So if we are here every Thursday at 8 p.m. Eastern, we're basically making time. I'm forcing you all to make time for this class. So that's why I'm doing this, because we tend to forget about the candlesticks. And let's see. I also have resources for support and resistance, and that's going to come later on in the class. Do we have any more? Do we have any more questions? I don't want to keep you all too long. I want to make these only 30 minutes because then it's going to be fresh on your mind. I noticed that when we spend an hour, 2 hours, that's just going to blow it. So I'm hoping that tonight when y'all go to sleep, y'all understand the history of the Japanese candles at least. But we are going to go ahead and have this every week. It's going to be weekly. All right. Anybody else have any questions? All right, let me go ahead and stop the recording, and I will be